You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate and farmland investment expert, Brandon Silvera. Now, Brandon's a fourth-generation farmer and real estate investor. He graduated from California Polytechnic University with an agricultural degree. Now, after graduating, Brandon started his career in the agricultural industry and has experience managing and farming a variety of crops. Brandon has bought and sold millions in real estate and currently manages over $100 million of assets. Brandon's farm management company was recognized in 2012 for achieving over a 900% growth and was listed on the Inc. magazine list of fastest growing companies at number 701. Now, Brandon's specialty is in farm management, land acquisition, and a variety of farm and land financing strategies. His passion is to bridge the gap between the farm and the consumer. Now, Brandon launched the platform Farm Funder in pursuit of that passion. And so with that, guys, I'm super excited to get on to our interview with Brandon. But before we do, I do have a few quick housekeeping items. Now, just like I do each and every week, I like to share my one personal, one professional best of the prior week. And so I'll start with the personal best here. My father recently celebrated his 70th birthday this past week. And while I was sad that I couldn't be there in person due to the COVID-19 pandemic that we're dealing with, I couldn't be there in person to share this, this experience and this milestone with him personally. I'm incredibly grateful that both he and my mother, they're both in great health and they had the ability to celebrate this special moment together, from the comfort of their home in Pennsylvania. And so just incredibly grateful that I still have both my parents and that they're both doing quite well in health and that they had the opportunity to spend this time together. And now moving on to the professional best, in an effort to ramp up our pipeline for new acquisitions here for the launch of our up-and-coming investment offering, we recently made a new strategic hire who just joined our acquisitions team here at Sunrise Capital Investors. And so with that, I just want to welcome Kirk Bosch to our team. We're excited to have him. And, guys, if you're interested in what we're doing over here at Sunrise Capital Investors, be sure to go to our website, which is sunrisecapitalinvestors.com, and you can get signed up on our mailing list to ensure that you are first to know about some of the exciting investment opportunities that we have coming down the pike here in the next couple of months. Moving on here. If you love what we're doing here at the Real Estate Investing for Cash Flow podcast, be sure to, number one, subscribe. But also, if you enjoy the content and you feel like it adds value to you and your business, please leave a rating and review on iTunes. It's essentially how we grow the show and how we attract awesome guests here to have on each and every week. And so please go do that if you haven't done so already. And then lastly here, just want to remind you of the free 30-minute phone call that I offer each and every week where you can essentially sign up to jump on a call with me and talk about everything and anything your heart desires about real estate investing. And again, this doesn't make a difference if you're brand new or if you're a seasoned pro. I love meeting others that share the same passion as I do about real estate investing. So go to my website, kevinbupp.com, to get signed up, and just be sure to include details of exactly what you'd like to chat about during our call together so we can spend that 30 minutes together as efficiently as possible. Okay, so go to kevinbupp.com, get signed up for that call. And now, guys, without further ado, I'd like to get on to the part of the show that you've been waiting for, which is our interview with Brandon Silvera. So here we go. Alrighty, guys, it is my honor to introduce my guest for today's show, CEO and founder of FarmFunder.com, Brandon Silvera. Brandon, how you doing today?
Good. How are you?
Doing great. Looking forward to having you here on the show. Very excited to discuss this topic with you. This is a niche that we've had on one other time, which is farmland investing. But it's not a niche being one time out of the hundreds and hundreds of episodes that we've done. This is about as niche as it goes. And so very excited to go down the rabbit hole with you today, Brandon, and talk about your business, your business model, the intricacies of it, and all the above. So very much looking forward to it here. But first and foremost, Brandon, I know that you've been running the company for a number of years. I know that you've actually been on a few other podcasts, and so there might be a few of our listeners that are aware of you and know about your background. But for the many that have not heard of you or don't know about Farm Funder, maybe take a few minutes to tell us about your background, who Farm Funder is and ultimately, how you got started in this space.
Sure. So I'm a fourth generation farmer. Family came over here and we're dairy farmers in the early 1900s, and decided that sometime in college I wanted to go back to farming and whatnot. So I went to college got an agricultural degree at Cal Poly. Came back, started doing custom farming and different work for other farmers, and decided to buy my own properties and start farming more on my own. And when I did that, I found that there's just there is a need for capital in the farming space. Mm-hmm. It's crazy. I mean, it's a very capital intensive asset, and there's not a lot of capital in that space. So as I was growing my farm and buying ground and refinancing out of it and selling ground and buying and trying to build, a good operation, there was just this void, where other people wanted to get into farming. They wanted to invest in farming, but I couldn't, I didn't have the vehicle to get them to invest in the farm. And there was just a lot of hiccups along the way. And then when I started to look deeper into it, there were legal reasons why you couldn't have investments in the farms and advertise these farms. And when the Jobs Act came out in 2012, it was like, this is going to be amazing for farming. And I'm actually surprised that it took, a few years for this to kind of catch on and to get things going. But that model of crowdfunding and is just, it's perfect for getting people to invest in farmland and be interested in farmland. And it's perfect for farmers to raise capital. So, I started Farm Funder, I don't even know, 4 years ago, I guess. But I've been working on it for even years before that.
Okay. Got it. Do you find that you mentioned the need for capital and the inefficiencies that existed in the space prior to the Jobs Act being passed? Like as far as the catalyst for actually you starting Farm Funder, was it more of the void of your own capital needs, or was it more the void of just outside investors, their limitations being able to actually get into the space, or was it equal amounts of both?
It's probably equal amounts of both. Okay. Most of the investments that have been going on over the last couple of decades in farming are large investments, insurance companies, REITs, and pension funds, and their barrier to entry to invest in these funds are millions of dollars. So, if you're a high net worth individual that has no problem investing $5 to $10 million in a fund, there's probably plenty of options for you.
Yeah.
But if you're a high net worth individual that wants to invest $10,000 to $100,000 or $300,000 into a farm, there were not a lot of options. A few different private equity REITs have popped up randomly here and there over the last few years, but it's just kind of new on that scale. And there's just a huge amount of people I think are interested in farming. The whole farm to fork type movement and local movement. People want to be connected with their food, and investing in your food source is such a great way of doing it. But can you spend $1 million? No, of course not. Most people can't. So I think we've got this sweet little niche, where we can just, if you have $10,000 or $30,000 or $50,000, you can say, hey, I like this almond farm, or I like this pistachio farm, and I want to invest in that. That looks like a good investment.
Interesting. So what is the average size? Well, two questions here, kind of an A and B portion of it. What is the typical transaction size, or I guess acquisition price point of these various farms that you're purchasing? And then I guess the B portion of that question would be, what's the average investment that any one of your individual limited partners make across the board in your different deals?
So because it's kind of new, we like to keep it at $1 million or less. That way it's easy to fund.
Meaning the actual price point, the acquisition strike point of any one farm that you're acquiring?
Yes, yes.
Okay.
There's a lot of larger farms out there for $10 million, but are we going to raise $2 million? Are we going to leverage that? What's the risk to the investors? We like to keep it $1 million or under for now, buy the property outright, and then see, what this crop produces, and are we going to leverage it? Are we not going to leverage it? It's not like a commercial piece of real estate where you're going to have your monthly cash flow within reason, right?
Mm-hmm.
There are a lot of other factors: weather, disease, pest, drought. So going in and leveraging a piece of farm ground to 80% would be a no-no. I wouldn't do that. There's just too much. So we keep it at say that $1 million or less.
Unlevered on everything, go at least initially
unlevered, and make sure, can we leverage to 40%? Can we leverage to 50%? Is the investment good unlevered? Can we make that 12, 13, 14% without stacking on them? And
how long do you how many years of operations do you typically like to see before you can get a comfort level whether or not leverage might be a good play in that particular case?
I'd like to see a couple seasons, just a couple years, just to see, what happens. And I can look at past crop history and things of that sort too, but I want to get a feel for what this farm is going to produce. So,
okay. And then typically, what type of debt is available? What are the options out there for a $1 million piece of performing farmland? Is it full recourse, local bank debt, or are there other options as well?
So we've got a couple options. There is a Farmer Mac type of a situation, but they don't. Farmer Mac doesn't offer a non-recourse type of a loan for farmers. There are, I think I can find up to $1 million at about a 50% loan to value. I can find a non-recourse, which is good for having this many investors in an LLC. If not, you have to go with a federal land bank, which there's some government. It's a government kind of co-op, a farmer co-op. They'll.
Hey guys, Kevin Bupp here, and I'm sorry for interrupting the show, but I have something super important that I wanted to share with you. Now, over the last few episodes, you've probably caught wind of me dropping hints on a little known about asset class that my team and I are very excited about, and that asset class is parking. More specifically, parking lots and parking garages in highly desirable markets. And just like we were ahead of the curve with mobile home parks, we feel that parking is one of the last asset classes where the mass consolidation has yet to occur. Anyway, we just wrapped up writing an ebook which goes into detail of the many reasons we are so bullish on parking investments and why you should consider this as a potential investment vehicle when seeking cash flowing real estate investments. Now, to grab your free copy of Parking Lot Profits, the top 10 reasons parking investments generate cash flow and legacy wealth, you can text the word parking lot to 31996. Again, text the word parking lot to 31996. All one word, no spaces, parking lot, all one word, to 31996. And with that, let's get back to the show.
They'll do up to 60, sometimes 70%, but there are personal guarantees involved with those. You can get away with it at the 50% or lower. So if you have a 40% loan to value, there's definitely anything from that 50 to 60, 50 plus. It's kind of hard in the farming world to find non-recourse
understood
debt.
Okay. And what type of crops do you typically specialize in? I looked on your website briefly, and very quickly I noticed you had a few, I guess in my mind, are niche type of crops. There was an almond farm that was mentioned, and also a pistachio farm. Maybe that's not niche. To me, it is. I guess being here on the East Coast, I don't know if they grow those particular crops here, if that's more of a West Coast thing. But just generally speaking, what are the different areas that you focus in as far as crops?
So right now our platform is open here in California. So most of our opportunities are in California, and almonds, pistachios. There's some walnuts. Different nut crops are good. We're looking for we want to make sure there's not too much risk to the investor as far as perishable. So I'm not really going out and looking for a cherry crop that if you don't hit that market, the cherries will rot on the tree, or you know what I mean, or you could lose quite a bit of value. So we're looking at something that's going to hold, and you're going to be able to sell through the year type of a deal. Nut crops are good. We're pretty happy with those. We are looking at an olive investment right now for olive oil. Contract grapes. If we can get a contract, or we have a contract with a say Gallo. I personally grow some grapes for Gallo, so we're looking at possibly doing some stuff where you have a 15-year contract, so we know that we're going to have a floor, and we know that what the ups are going to be. But we have to manage the risk. Row crops it's with the land values currently, we're not doing many row crops, but we look at each deal individually.
Got it. And who are the typical sellers of these different farms that you're acquiring?
So it just depends. So everything I have on the platform right now are all pre-funded by Farm Funder. And we did that just because we're a new site. And we, as a new portal, we want to make sure that we have control of the investment and we know what we're getting ourselves into. So, but, ideally we're buying farms from retiring farmers, people that just are going to retire and they want to get out, or that particular piece of property doesn't work for them any longer. But mostly it's retiring farmers. A lot of times in the farming industry, this ground will stay in a family for 100 years. So that's not unusual.
Now, is this as far as a long-term picture is concerned, I mean, or possibly some of these farms, maybe some that you own today or some that you might own in the future, is it could also be classified as a covered land play, to where there could be a higher and better use down the road? Or is this strictly investing for the use of farming and really, no future potential use of commercial redevelopment?
We do have those opportunities that come up. I don't have any on the platform currently. But there are pieces that we actually farm for other people and for myself, not included with Farm Funder, that are located next to towns that the city's moving that way, and it's going to be a great investment. But I don't have any of those particular deals on Farm Funder, and most of the reason is that they want a high value for that land because they know it's going to be developed. Yeah. So it could be worth $100,000. You're going to pay $30,000 an acre for it today, but at $30,000 an acre, what crop are you going to grow to give your investors a return now? Sure. I can say, hey guys, in 10 years, you're going to make a lot of money. Right. But
it's all speculation at that point, right?
Yeah. How do you sell that to to everyone on the portal? It's kind of hard. So what we do is we're looking at a 7 to 10 year hold period, to where we have cash flow. So we like producing nuts. If we do a development, which we're doing a pistachio development, we're looking at a 24-month to 36-month refi, where we're going to refi out of it or sell the developed orchard to another company looking for nuts that are getting ready to produce. So that's kind of our angle. We want the investors to realize that income a little sooner than 10 years.
Okay. And historically speaking, of the the investments that you've had over the past 7 or so years, what have the actual rates of returns look like in the different farms that you own?
I hate to say that, and the reason why is because land values have really gone up over the last decade. So I have some property that I bought for $5,000 an acre that appraised for $32,000 an acre. So that is not something that is I can't say that that's going to happen with an investor. So we've done really well off of appreciation and off of just the price of nut crops in general. Have been great. We were lucky enough to buy in good water districts. Water is a huge issue out here in California, so we're always looking at where's our water coming from, where's our groundwater at, where's our surface
Mhm.
water at, and what are our legal rights to that water. And when building this, 15 years ago, I was, that was something that was on the forefront of everything. So we lucked out. So we've done well, but
Okay. Well, was fair enough. Then we don't want to set the wrong expectation. So aside from the appreciation that's happened on the actual just the raw value of the land itself, when you go into any one of these investments, looking from a cash flow basis of the actual operations as it sits today, or what you intend to do with the actual operations, again, aside from the actual value of the land itself, like what types of, generally speaking, again, I don't want to set expectations incorrectly here, but what are you looking at going in as far as the target window of projected returns?
8 to 15%, somewhere
Okay,
around. Yeah.
got it. Unlevered or combination of the two?
That's levered for
Okay,
most of that's levered.
got it.
It all depends on what the orchard is producing. There's so many different variables there. So, for example, on our current almond offering, we're looking at a 13% unlevered rate of return, and mostly that's because this is a brand new orchard coming into production, 5 years old. Our full production is going to be coming in next year. We already beat our mark last year of what we were going to produce. We were expecting about 1,800 pounds, and we came in just under 2,000 pounds. The price of nuts were up another 30%. So, it's been pretty good as far as that return goes, unlevered.
What are some of the biggest risks aside from debt and over leverage? What are some of the other bigger risks of this type of investment as far as investor capital is concerned? You mentioned one earlier, a bad harvest, right? So that's obviously one of them. But what are some of the other potential risks associated with farmland investing?
I think it all depends on where you're investing and what crops you're investing in. Obviously, there are different risks, with everything. So here in California, where we're at, water is a huge risk. So drought is going to be a huge player. What we do is, we have crop insurance, and we'll leverage, the crop. We'll pay for the maximum amount of crop insurance we can for our investor properties. That way, all the cultural costs are usually covered within reason. So at the end of the year, if you have a complete catastrophe, you're not paying out of your pocket. We're not going to ask for a capital call or anything like that. So we're hedging that. But water's huge, and just the market as a whole. I mean, there's always that chance that we're going to overproduce. There's always the chance that there's going to be other environmental factors.
Got it. And then, historically speaking, how has farmland fared during inflationary times? I mean, can you give a general perspective of what that's looked like over the last 50 or so years?
Pretty good. I mean, most of the time when we have inflation or any kind of high rate of inflation, farmland is since it's you're producing, sort of like a factory, right? You're producing this a tangible product. Anytime that product's worth more. So if you go out and buy property for $10,000 an acre and we have inflation, that $10,000 an acre may have seemed expensive at the time, but now what are the price of those nuts? In an inflation type of situation where nuts were $2.50, it's not unusual for those to be $3.50 or $4, right? And usually farm ground is a direct hedge against inflation.
Okay. How about your clients themselves? What's the typical demographic of your investor? And then the second part of that question would be, is it fairly common that your investors come and actually take a look or visit your farmland prior to them investing?
So the demographics is all over the board. So we've had lawyers, doctors, businessmen, software designers, you name it, come and invest in the platform. As far as coming out and actually look at it, no, not really. We've only had one person come out and check out the orchard, and I think it was more of a they were in the neighborhood type of a deal. But no, but we even advertise on the site, we want you to come out and check it out. That's part of it. If that's something you're interested in, you want to see it. Not only are we going to send you, what's going on through email as far as on your farm. So, for example, the almond orchard is in bloom right now. It's beautiful. We're sending emails out that are saying, hey, look what's going on the farm. It's pretty cool. We're starting to get nut set, on these plants. But if they want to come, we do welcome them. But realistically, it's not. If you're in New York, you're not flying out to come look at your investment.
Sure. Got it. Well, fantastic. What else, Brandon, have I not asked you that you think might be relevant related to your business and anything, again, that relates to farmland investing?
I think what sets us apart a little bit different than most of the people out there doing farmland investments are, there's a lot of investment bankers, there's a lot of REITs, there's a lot of different people doing farmland investments. And most of their model is they buy the property, they find the right farmer to lease the property for them. So their return on investments can be anywhere from 3% cash return to 8%. There's a lot of money that's left on the table because the farmer obviously has to make a profit, right?
Sure. Mm-hmm.
So what we're trying to do, and our biggest thing here is we want the investor to capture that additional profit. So either our company is going to farm it or we're going to hire a farm manager, depending on the location of this farm. And 100% of the profits from those crops, we want to go to the investor. So instead of them having a lease rate of 3 or 4% or even 5% if you're lucky, which isn't very common right now, we want them to make that 10% or that 12% or 13%, the money that the farmer we're going to make as well. So I think that's something that's not really being done right now. I think we're alone in the field there.
So obviously that's obviously better for the investors, a little bit more of an operational challenge for your company because you guys are actually, many more moving pieces on the operational side. You're not simply just signing a lease with the farmer that's going to manage the day to day and do their thing, and you have a set amount of revenue coming in from that lease agreement annually. But in turn, everyone makes more money. Hopefully, it really is the end goal. So that's a beautiful thing.
There is a little bit more risk, obviously. When you have a signed lease that they have to pay, there's a little bit more risk to the investor. But I also think that there's a little more pride, and the upside is better. I mean, it's kind of leasing something out and knowing that you have this crop and you have these almonds, and when you invest in the site and you invest in this particular piece of property, and after harvest we send you a bag of almonds and those are yours. It's kind of cool,
Yeah, absolutely. I love it. Well, fantastic. So, Brandon, I'd like to enter what I call the lightning round of the show. And this is where I'm going to ask you 6 short, concise questions. Look for 6 short, concise answers. And the first one is your biggest fear. What is it?
Probably failure, whatever that means in each person's mind, right?
Yeah, that's a big one. How about your one biggest regret?
Man, I wish I would have bought way more ground when I was younger. And even though I'm not that old, I guess, but
you might be saying that when you're 60, so you better buy as much now as possible, right?
Yeah. But when you're younger and you used to look at these deals and you would say, oh, I can't afford that. That's $6,000 an acre, and that same ranch today is $40,000 an acre. It's like, man, there's so many more deals I wish I would have done and risks I would have took when I was younger, because when you're young, you don't have anything. Not much to lose,
right? How about the most influential business book that you've read?
For me, one of the books that I read, maybe it's not even a business book, but I bought a book on an MBA book on business accounting and managerial accounting, and I read this 300-page book from start to finish, and probably boring to most people, but it taught me how to run a business, read a balance sheet and a financial statement, and be able to know what you're doing and get a grasp on anything, whether it be an investment or your business, as a whole. So that for me was game changing.
It's amazing how many people start a business and they don't have the basic foundations of the accounting side of things. I mean, they don't know how to read a balance sheet, a profit and loss statement, what have you. It's unbelievable. Now, I've never found myself reading a 300-page accounting book, but however, I have taken multiple different classes, and I have a firm understanding of that side of my business. But many folks don't. And if there's anything that you can do that's of the biggest value to you in your brand new business that you might be getting off the ground, is get a very firm understanding of that side of the business, because nothing else matters if you don't have a grasp there, or have someone in your organization, a partner, what have you, that has a very firm grasp on the operational and accounting side of the business. So no, that's wonderful. Again, not maybe you're going to go read that big thick book, but kudos to you for doing that.
Well, what it made me realize, I think, luckily at a younger age, is that there's a difference between owning a business or being a business owner and running your business, right? I mean, I don't know if that makes sense, but I think there's a lot of people out there that may own a business and they may do all right, but do they have control of that business?
Yeah, and more so that business runs them. That business owns them. They don't own that business.
Right. Yeah. I mean, so there's a difference there, and I think once you learn those foundations, accounting foundations, you kind of get the control. If that makes sense.
How about outside the daily work grind? What do you do to decompress?
Oh, well, I don't know. I spend as much time at the beach as I can, but it's only 2 hours from here. But I don't get over there very often these days. So that's my goal, is to be there. Okay.
I asked you about your hat when you came on the show. He's wearing, for those that aren't looking at the video now, he's wearing a Columbia. I've got the same hat. It's a fishing hat. So I asked him if he fished, and he said not as much as he'd like to. So it sounds like that needs to be a goal written on your vision board, my friend.
I do hunt every once in a while. So yeah.
How about the one thing that you can't live without?
The one thing I can't live without, to be honest, my family. So
that's a big one.
One cool thing about being raised on a farm is that, my office is down the road from my mom and dad, so I get to go by there and see them all the time. And my sister's in the next room doing something. And it's pretty cool to be that close,
No, absolutely. I love it. And lastly here, what would your backup plan be if one day you woke up and you just decided that you no longer wanted to do what you're doing today with, let's say, farm funding or just farming in general?
That's such a good question. I don't know. When you're out on the farm and you're in a rural area, I always wonder what it would be like to own a restaurant or a hotel where you get to see different people all the time, right? And really interact with your customers, So I don't know. Maybe I would mess around with something like that where you got to see your customers on a daily basis. It's always kind of intriguing to me when you're out in the field and there's no one around all day. It would be weird to be in an industry where you get to see people every day,
Yeah, it's funny. Like the grass is always greener, right? So like you're speaking to just I wouldn't call it loneliness, but like the solitude of just being out there. Whereas the folks that are probably working in that busy environment are probably like, oh my gosh, I wish I could just get away from these people and and head out into the rural part of the world and just not be bothered, right? So
I'd probably last about 12 months and be like, all right, I'm done.
You got to find the fine balance between the two, right? I think that's the ultimate goal. Yeah. So, Brandon, you've shared a lot of great information here today, lots of golden nuggets. And what I'd like to ask of you is if you had just one final golden nugget of advice or wisdom that you could leave with our listeners here today that may inspire and motivate them as they progress in their own real estate investing career, what would that one last golden nugget be? I
mean, personally, have fun with your investments. I mean, if you, I understand you got to play by the rules and diversify your portfolio and whatnot, but I really think my success in any kind of real estate has been because I truly love what I'm investing in and what I'm doing. So I think you got to have fun doing it.
Absolutely. One of our core values here at our company is enjoy the ride, man. If you're not enjoying the ride, go find a different ride to get on.
Yeah, I agree.
Yeah. Well, fantastic, Brandon. This has been a lot of fun. Folks, if you'd like to learn more about Brandon and his company, you can go visit his website, farmfunder.com. And funder is spelled FUNDR.com. Again, farmfunder.com. And I'll be sure to put that in the show notes. And so, Brandon, thank you again for joining us here. And folks, thank to each and every one of you for joining this week's show. And until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. You guys take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.